Thank you, everyone. Just Paul here from research. I'll just go on. I'll start our weekly webinar. Okay. And if just a quick recap of the Thai beverage results. Beer losing from interest. Basically, what we're saying is that the beer business was loss making in the fourth quarter because of the huge interest expense being burdening the whole beer segment for Thai beverage. Okay, anyway, we'll just start off. As you can see from the fourth quarter results, first point is that most of the earnings actually comes from the spirits business. Beer is actually losing money. I think spirits is, like I said, more than 100% of the earnings. The positives on the results was firstly the volumes actually did well, but bear in mind that a year ago it was because there was a big plunge in volumes. As you know, post morning period and so forth. So there was a lot of seasonality in the numbers for last year. The other positive was that there was higher dividends. The company dividends rose, but the yield for this stock is still low, about 2%. In terms of the negatives, I think the beer that we mentioned earlier was under pressure. I think the earnings were suppressed by 8% rise in the interest. I think per quarter they're paying at least about US 30 million. Yeah, at least in the fourth quarter alone. So whatever earnings you can get from this division is all taken up by the interest. Probably the banks are doing better. But anyway, move on. Anyway, for the other reason why the big earnings was also pressed down by Fraser's Property. I think because Fraser's Property is considered as an associate, and they do benefit from fair value gains. I think the prior quarter there was like almost 440 million, not the full thing because they are associate of gains. So there was less this year. So that's why you also get a hit on earnings. And for us in the medium term, we are negative. I'll talk about the IPO later. In the medium term, we are negative for two primary reasons. I think despite spending 5 billion plus to acquire Sabeco will still be an earnings drag to the group because of the interest burden. I think it probably take a few years before Sabeco will really start to contribute earnings to the group. The other thing is that we're not so upbeat on consumer spending in Thailand because I think any surge it will depend on the government support. And then we downgrade our recommendation to reduce. I think our target price is about 80. We cut it to 83 because we cut our FY 20 earnings. We lowered margins is also because of the high interest expense. Okay, I will move on to the Singapore Weekly. In terms of for the macro news, I think there was quite a number of at least marginally positive news coming up from Singapore. I think we got our industrial production. It was up 4%, much better than the September quarter, and the prior quarters were all negative. And we also had a small uptick in the PMI numbers for Singapore. And also for the loans growth, I think Mini will share more in the banking report, but we also saw there was a marginal improvement. So in general, I'll show you the charts later, but in general, we can say that for the Singapore economy, things are starting to bottom up, starting to improve at least marginally. But at least we're seeing less downside now, and the economy in Singapore is starting to improve. The numbers in the US, firstly, this is durable goods, nothing more. I think it's just a capex indicator of the corporate capex. So this is the weakest part of the economy for the US. Despite the vibrant GDP, strong consumer spending, the corporates are not spending. And I think as you head into an election year, I think this is going to be a problem because as we head into election year, there's still going to be a lot of policy uncertainty, and this is probably going to suppress corporate spending in the US even further. The other thing was the inflation numbers. This is what the Fed looks at. They got a 2% target. So actually kind of vindicates the Fed that they cut rates because inflation is still low and starting to even trend down even though they lowered rates. In terms of the global, I think this is probably the biggest news, macro news for last week was the rebound. Since no one doing any China Weekly, so the biggest news was actually the rebound in the China manufacturing PMI. This is the first 50 reading. 50 means this is a diffusion index. So 50 kind of means that the things are improving, at least from the surveys. So this is the first 50 reading in 7 months, and also we see the new orders improving. Okay, in terms of our corporate, dial back a bit. Now we go to the Thai Beverage IPO. What was mentioned by the company was an exploratory stage. For us, we are a bit skeptical of this IPO. Firstly, it's almost like a dual listing of Sabeco. Sabeco was already listed in Vietnam, and it's already trading at 30 times PE. And the share price now is 226 compared to Thai Beverage cost of 320. So if they're going to list, they have to at least list something that's maybe 30, 40 times PE, because you want to, you obviously want to list it above your cost price, about 320. And the problem is that the beer business for Thai Beverage is really weak. They're making only like 27 million per year US. And Bloomberg quote was 10 billion valuation. But anyway, the reasons why the beer earnings is weak is because, at least for last year, their interest expense is almost 170 million US. So they got a huge interest burden because they bought they took 5 billion loan to pay for this. So this is going to suppress earnings, like we mentioned. So I mean, if you do some scenario, really loose scenario, if you assume 20% stake sale and the market cap is 5 billion, right? Maybe they save a bit on interest. Even then, when you add back everything, the PE is probably about, I don't know, 80 times PE, 80 times PE for FY19. So I think an IPO is going to be a bit of a stretch, because the valuations really have to take it to some stratospherical level to list, to make it meaningful for them to kind of cut down their so-called 170 million interest expense a year. Okay, anyway, move on to the tactical views. I think we're beginning to see growth reviving. I think you can see some of the macro data in China, Singapore, and to a certain extent, US starting to at least bottom out and start to grow. So I think what will happen is that this probably bonds will be at risk, and probably will be switching away from so-called fixed income proxies or REITs and so forth. In terms of weeks ahead, the news will be the 15%, the tariffs on the remaining, the balance of the Chinese imports that are not been imposed tariffs. So no date yet, and I guess everyone is just watching for this phase one deal. Okay, very quickly, just to show you some of the charts. You can see there's a slow improvement. I think it's not about the most important is that it's starting to bottom out, so that's key. You won't get hopefully things will start to creep up, and industrial production and the economic situation is improving. So we see that here and we see that here. The next is PMI. Maybe the new orders will start to, we should expect to see some improvement. So I think globally, at least for Singapore context, things are at least bottoming out and starting to improve. In terms, this was the earlier number. So long as inflation is here, don't expect any reversal in monetary policy. They got a lot of headwind not to kind of raise interest rates, and you probably need to see inflation probably at these levels before above 2. The red line is their target before you can see the Fed raising. So rates are still pretty low. This was the big I think the China PMI numbers started to do a big rebound. This is the weak corporate spending chart. Last one, this is just to show our Phillip Absolute 10 how we performed. I think it was a flat performance for us, although we did better than the STI's 1% drop. What helped us was, I think, Sheng Siong was a big winner, and so CapitaLand and Singtel. These were some of the stocks that helped. What dragged us was the banks again. I think the bank continued to be a drag for us. And also some of the REITs, I think the REITs were sold off, so I think that's what affected us. But the other stocks kind of held up the performance. In terms of what did well last month, broadly, I think commodities did well because many Bilma did perform very well last month. Healthcare was one of the worst sector because of IHH. Because all these sector performance is all driven by the large caps. Okay, move on to CapitaLand. Natalie's not around. She's gone for the Fraser Logistics briefing. But anyway, just to give you some flavor of what happened in the CapitaLand Investor Day, which was held on Friday. Basically, some of the key things is that number one, I think they're looking to divest so that they want to lower they're looking to deleverage. So they always say it's all about capital recycling, not just hoarding assets, but to sell. So the good thing is that when let's say you sell 6 billion of assets, and part of it goes to the REITs. So it's like you sell, but you still can eat your cake because in a sense you're still getting fee income to these REITs. So you make disposal gain, but at the same time you get fee income from this. So this sole capital recycling, at least to their own funds, is a positive thing. And when you do collect fee income from REITs and funds, these are the higher ROE business. I think this is poor marketing, PR hype. But anyway, they're looking for scale. Just a reminder that you need scale to grow this business. And right now, the two key geographies for CapitaLand is Singapore and China. It's like 50-50 almost, the contribution. So the other country they're looking for in terms of geography is Vietnam. Vietnam is going to be a high growth area, and also India. So these are the two other countries that they are looking for. And they need to, and they also mentioned they want to split developed and emerging markets. One of the reasons you need that is because like for instance, the NAREIT index, you need to have some developed countries, although the growth is lower, but to enter in some of these key indices, you need to have some developed country exposure. This is just to mention that their gearing levels. So Vietnam and India was mentioned many times. So I think their focus is here for growth. And also, in order to increase their ROE, what they're looking for is the lodging business. So as you know, some of the core focus is the lodging, at least for like Somerset service apartments. So this is one area where they hope to grow their fee income. The other thing is to grow their assets under management from 71 to 100. So this is another source of fee income. Inside each 100 billion, it's not just REITs, it's private funds and so forth. And also to do development work in some of these key markets, especially Vietnam and India and China. I think Singapore, for Singapore, what they mentioned is more rejuvenation projects. They didn't mention details of what type of projects. So Singapore, as you know, land banks are discussed, so it's not to regenerate like what they did for Liang Court. So some of those, these are some of the projects that, some type of work that they're going to do. For this, I think nothing much. I think can read on. It's just on India. Their focus, I think, is mainly on logistics. So logistics business, because there's not enough malls in India. So what they're looking for is to build more logistics and to ride on the e-commerce. And because it's so hard to get land, it's like a long-term optionality when you buy some of these logistic assets. So that as the country urbanizes more and more, these logistics centers could actually have some development potential in future. Okay, nothing much. I think I just skip you out here. It's all about fund management and fee income. So their fee income will come from fund management and lodging. Basically, their service apartments, Somerset, C13s, and Escort. Okay, I'll move on to Warren on the technicals.
Thank you, Paul. So for today, our shares our STI, UOB, and then lastly on the Dow Jones Industrial Average, just an update. So moving on, for STI, price has a slight bear correction during the second half of November 2019. Prior to our sharing during the first week of November, we shared that there may be a strong move up to the immediate supply area high. But however, price did not actually, it failed to materialize, and then price continued downward momentum. However, we believe that the downward momentum may be a bit short-lived. And you can see over at the dotted string line, we believe that after a slight downfall, there may be there will be a strong rally again up to the immediate supply area, and then have a false breakout. And then after that, form a true wave down to form the ending leg or the fifth wave of the symmetrical triangle. And lastly, also we believe that the STI is going to range between 2,900 to 3,600 for a prolonged period of time. And then, and also price has already formed the A wave of the running flats. So B wave, we might take a little bit of time to see it forming, perhaps maybe in the second quarter of next year. So moving on, there's an alternative view also in the long run. Is that it should wave 4 be broken and then subsequently 3,006 be broken, the probability of the index climbing up to 4,000 is relatively huge. So this will confirm the symmetrical triangle as the corrective wave instead of a regular flat, and the third wave will actually come earlier than expected, and the bullish one will be very tremendous. So so on the daily time frame, it is quite supported with a bullish upside to an immediate supply area that is also highlighted on the weekly chart. So first, the bullish flag formation above the 50% retracement level between 3068 to 3286.51, gives us a clue. And then secondly, the bullish pin bar also is above the 50% Fibonacci retracement of the same range I mentioned earlier. And lastly, the divergence that is shown, although the RSI did not show a very strong, is almost like a flat divergence, but we can see that the momentum is currently flat while the chart is showing a lower low. So however, should price remain below a support level of 3216.87 for 4 consecutive period, then the possibility of price hit lower to 3150 and beyond will be greater, and then therefore there might be a rally. So ultimately, on the greater scale, the STI is ranging for a very prolonged period of time. There won't be any clear indication of uptrend or the downtrend. So moving on for UOB, the similar wave momentum. There's a similar wave momentum as the STI. Downside pressure may persist, but not very long, based on weekly chart. First, because bullish reversal may happen soon due to the diamond bottom and then ascending triangle formation within the diamond bottom. Sorry. So price may hit 29.58 to form wave B. As you can see, is 88.6% of the Fib retracement of the whole total wave A. And then the 5-wave primary wave has been completed. So in the long run, we believe that there will be $30 will be the maximum resistance, and then after that, subsequently, the price will have a form of 5-wave subwave down to a corrective wave to at $22, $22.38 to $22 before it has a strong rally beyond $32. So for Dow Jones, this will be a bit tricky. Based on the last sharing session, I shared that 28,000 to 30,000, it may not be a dream after all, but there was some precondition. So let's move on. So after the 28,000 level is broken, the bullish trend is confirmed, and after breaking out of the weekly and daily expanding triangles, which I shared on the 4th of November, that this has already the 28,000 level has been broken, and then it will continue to go. The trend will continue to have a bullish momentum higher. So after 27,400 is actually broken for more than 5 consecutive periods. So, but however, price seems to be retracing after RSI bearish divergence and bearish shifting star formation appear on last Friday, right below just a few, just 30 points shy of 28,200 psychological level, which I shared during the last sharing session. It's also considered key reversal level. So we believe that a bullish trend is still intact. However, but we believe that price may retreat back to 2750 to 2739.68 to stage another rally beyond, and then beyond 28,500. Support level confluence with the Fibonacci level of 38.2% as well. So with that, our presentation is ending. So is there any question before?
There's a question on China Sunsin. We do not cover Sunsin right now, but they are going through a share split, 1 to 2 share split right now. That's why there's a trading halt.
Hi. We have a question. Can you kindly comment on SPH REIT? The price is trending down. We don't cover SPH REIT, but what we understand is that the market didn't like their recent acquisition. It's a mall in Adelaide. Let me just rephrase it. It's in Adelaide. I think the population in Adelaide is only 1 million plus. So I think, and the acquisition, the DPU accretion is only like 1-2%. I mean, I don't know. I'm just thinking, why do you need to buy a mall in Adelaide? Okay, because we don't cover, but that's the only comment we can say. I mean, it's such a small city. Why do you need to go get something there when the accretion is so low? So anyway, we don't have the details, but that's the feedback we got, that the market doesn't like this acquisition. Okay. So, because Natalie is not here, but I'll try my best. Is the correction on the REITs over, in your opinion? Okay. Firstly, just a reminder why the REITs have done well. I think as we went into, sorry if you heard this before, but just a reminder, as we entered 2019, expectations was for 2 interest rate hike. Okay, so everyone was expecting the interest rates would rise, but then instead we got 3 interest rate cuts. So there was a 5 rate swing, interest rate swing in expectation. So that's why you got this big swing, big surge in the REITs, and they performed so well this year. And also they raised like 8 billion. So that is also going to be a share overhang. My view is just that I think it's probably moved sideways at best for now. I think the other bugbear you're going to get for the REITs is that if the economic situation starts to improve, and then you get a reversal instead, I think rates start to climb up. That could press REITs down. Sorry, I give you a long answer, but I just think that at most you're just going to move sideways. That's my fear. This whole interest rate headwind is already over. Yeah. The other question we have is, what good is there with ThaiBev on their brewery IPO? I think they are trying to de-gear that. So that was very clear. I think you got like 170 million interest rate expense. I don't think they want to keep on holding this, keep paying this. IPO, no. What could happen? I'm just speculating. But what could happen? Maybe they could sell part of the stake to Anheuser-Busch. I think that's some of the rumors out there. But again, maybe if they can't get the valuations for IPO, which I don't think they can get, then they will probably maybe just try a strategic stake to Anheuser or any of the global brewers to try and de-gear. So the whole purpose is just to de-gear. My view is just that in the near term, I mean, ThaiBev is still a very good company. I mean, the market shares are huge and they control the whole spirits business in Thailand. And it's a very good strategy to go into Sabeco because it's growing. But just that in the very, very near term, the interest burden is just so heavy for them. So they just need to go through this whole process, maybe the next 2 to 3 years before the interest burden starts to whittle away. So IPO, I think they want IPO, but I don't think they can get the valuations they want to. And even like IPO, Sabeco is already listed. So what are you doing? Just like a secondary listing of Sabeco rather than of course you can call it IPO, maybe the exchange call it IPO, but it's more like a secondary listing. Sorry, the FCOT, I think I need to wait for Natalie. I'm sorry, very sorry. I'm not sure I don't have the details at all, so I can't comment. She will very likely write a note. Then I think in the next webinar, I think you'll probably get more details for her. Yeah, so sorry for the FCOT question. I'm not able to help on that one. Thanks.
Hi, there's another question. Where are we in the technological cycle and specifically to semicon beginning uptrend? I think what we have seen in the recent results, most of the semicon have been guiding positive outlook because of bottoming in the memory chip segment. So previously in start of 2019, there was a oversupply of memory chips and also a dim outlook due to the trade war. So now things have reversed and the sentiment has improved as well. And also there's a big technology driver that is coming up, which is 5G. This will be a boost for equipment makers. And also when there's 5G, there's a demand for 5G products such as phones, mobile devices. This will also increase demand and the need for more memory chips, which is getting there will be an increased amount of memory chips now, given the processing power of 5G in each phone. So we think that this is a beginning of uptrend also because the equipment makers in the US have been guiding upwards their capex levels as well. Yeah, I hope that answers your question.
If there is no other questions, we will end the webinar here today. Thank you for joining.